You are listening to chartingwealth.com for Tuesday, the 28th of April, 2015. And where are we starting? As we always do with IYY. Now, we're going to try to do this recording. We do it in video, but we also keep in mind the folks can only listen to us in audio. So we're going to do both today. What we are seeing on the chart, for those of you who are watching the chart, and again, I encourage you, you can find us at chartingwealth.com. You can watch the video. You can also listen to the audio at SoundCloud, iTunes. You can also catch the video on Twitter and on Facebook. So we do everything we can to provide every array of audio, video, whatever you need to follow the markets. Let's look at IYY. This again is the Dow Jones U.S. Total Market Index Fund, so it's following everything in the market. What do we see happening? Well, we see yet another move up. Those of you who want to learn how to draw trend lines, check it out. We are moving the trend line right now to make sure that we capture 3 candles. And what you see, for those of you who are watching it, the 22nd, the 24th, and then the chart for the last 2 days, you see it all encapsulating what a beautiful trend line. Bottom up, top down, so this is an up move, so we're drawing the trend line at the bottom, and we are encapsulating 3 candles. We're hitting 3 candles at the bottom. That is a beautiful trend line. Now, let's talk about what we see. We see that the derivative oscillator is falling off a little bit, so the momentum's slowing. We do see that overall, and again, this is a 2-day chart, so if you paid attention to the market on Monday, the 27th, you saw that the total market was down 0.42%. Why is this not a red candle? Because it represents 2 days, not just 1 day. We like bigger charts. So we do see it reflected in the derivative oscillator moving off. We also see that the MACD, if you look here on the 24th, we're looking on the 24th, it is actually more divergent, that is further apart than today because the momentum is slowing. Now we are going to revert from the 2-day chart to the 4-hour chart. Those of you listening on audio, you can you just listen, because what we see on the 4-hour chart, remember, it's half day. So what we see happening is in the morning, market is up. In the afternoon, market is down. However, it recovered substantially, and we do not have a breach of our 2-day trend line. What does that tell us? Tells us to watch. We see that the derivative oscillator dropped way off, but we don't have a crossing going down. We do have something to pay attention to. We do have the candle in a red candle means a down candle, and we do have it breaching both the 34 and the 30 moving linear regression lines. Now again, that gives us some warning, so we're going to pay attention to what's happening. And remember, we're in the month of April. April typically is an up month in the market, if I remember correctly, up 18 of the last 21 years. Doesn't mean that it can't end the month down, but it is an up month. And if you look, just look at April. You can see it. I'm looking at a chart starting on April the 1st. It was down a little bit, hit its bottoms, and it has been up pretty much every day since. It went down 1 day, 2 days, and then the rest of the time, it's pretty much been up. Today was a little bit of a down day. So again, we're getting ready to hit the summer doldrums as we hit May, but April is the last of our big 6 months for good, strong moves, either up or down. The problem that we get into in the summertime doldrums is that we lose volume. That means that a lot of the big money leaves the market, so the market sort of meanders, and it's harder, much, much harder to chart. That's what we're interested in doing. I'm looking at the chart right now, and if those of you who are looking on video, you can see when we had a crossover going up, a bullish crossover on the 16th, what a great run up. We had a bearish crossover going down. What a great run down. Another up on the April the 5th, 6th, I guess. Another nice move up. Then it started getting screwy toward the end of the month. The 17th down a little bit, then back up on the 22nd. So again, we are getting to the end of the nice, good, strong moves either way. And what we like are chartable charts, right? We like charts that are easy to chart. Now let's go from the IYY We are going to now range out to 2 days. We're going to go to the SPY. What is that? Well, that is the S&P 500. It is, again, a SPDR's ETF, exchange traded fund, and that's what we see. We see now, and again, this because the SPY is such a big chart, many times it does parallel more the IYY than maybe the NASDAQ 100 because it's 500 big companies, right? What do we see here? Well, we see again another need to redraw our trend line, which we will do very, very quickly. And again, we've connected 3 good candles going up. Overall, the SPY is down, similar to the IYY. It's down 0.42%. Okay, that's 0.42%. That's not 4%, 0.42%. So what do we see going on? Well, we see up movements on the 2-day candles. We see that there was a major crossover back on the 10th, going up on the 2-day chart. Again, like we saw in the IYY, we see the derivative oscillator backing off some, but we continue to see 3 good strong candles on an uptrend. Then we see back on the 20th, a real sort of question there, almost a hammer with a red down candle. And then we see prior to that, 8, almost 10 days there of good up moves. So we end today down overall, but the candle itself, because it represents 2 days, is up. Derivative oscillators falling off. The MACD, again, converging. Divergence means it gets farther apart. Converging means it gets closer. We see it converging and not pushing through the 50-period moving average. Okay, again, on a 2-day chart, 50 periods would be 100 days. Simple math, huh? I'm just a whiz. Okay, let's go out to the 4-day chart and see what we see. I'm sorry, 4-hour chart. Very similar to what we saw in the IYY. We have a beautiful, clean, again, touching 3 candles on the 2-day chart. We have a nice trend line. We love trend lines. Again, if you gave me nothing except prices and a trend line, I could do something. Not as good as having things like the MACD and the derivative oscillator, but it's helpful. Trend line, trend is your friend. What do we see happening? Trend's not violated. We do see a much greater convergence of the MACD and a much greater drop in the derivative oscillator, but again, we don't have any violations of the MACD nor of the trend line, so we are still in an up move, but we are paying close attention to what's going on in the SPY, realizing that we're getting near the summer doldrums as this month draws to a close very quickly in just a few days. All right, let's range back out to the 2-day chart. Let's drop over to the Qs, the NASDAQ 100, and I just love the Qs. Now, can we get a good trend line here? Yes, we can. Boom, another good 3 candles, 6 days on the 2-day chart. We see a crossover in the NASDAQ back on the 20th. We see the derivative oscillator continuing to gin up. We see the candle for the last 2 days that we're in right now, ending the day on Monday, well above the Bollinger Bands. What are the Bollinger Bands? Those are volatility bands, and they're like rubber bands. So whenever anything gets out, it gets pulled back in eventually. It's almost like once a candle gets outside the Bollinger Band, it is sort of in an area of space where there's no air. So it always comes back in, or the Bollinger Band stretches out to get it. So we are above that. A lot of up movement in the NASDAQ as far as things went over the last 2 days. Now, the NASDAQ overall down 0.25%, so 0.25% today. But again, that is not reflective of what we see on the 2-day candle. So let's jump back now and look at the 4-hour chart, see what we see. Ooh, interesting. We see a good morning, and then we see what we would call pretty much a doji in the afternoon. What is that? Lots of indecision. We have a little bitty red candle. Movement up, movement down. And remember, when you're reading candles, the wicks mean that if it's a wick on top, it means that the bears were able to pull what the bulls pushed up down. And on the bottom, it means that the bulls were able to pull up what the bears pushed down. So it means lots of indecision. So we'll have to watch. Now, if you look at the derivative oscillator, it fell off on the 4-hour chart. But look at the MACD. Not a lot of of reduction in the difference between the lines if you look at the beginning of the day and the end of the day, not that drop we saw where it just turned over. So that's still looking better. And again, we're well above our nice, clean 2-day trend line, or actually 6-day trend line. We connected 3 candles on the 2-day chart. So that's where we are. Again, we're cautious, we're watching, but again, the Qs, IYY, and SPY are continuing to go up. We will pay close attention whenever you start seeing indecision things like dojis, crosses, these kinds of things. You start paying attention. Now, let's range back out to the 2-day chart, and we will lastly go to gold. Gold is interesting. Look at gold. We talked way back here many, many days ago, and I'm going back to the 10th and the 14th for people who are joining us just on audio, where gold originally was just going up from the 19th of March through the 23rd, the 25th, the 27th. Again, we're looking at a 2-day chart. The 31st, it rolled back a little bit, but then it caught its breath and trudged up again on the 2nd and the 6th. But then from the 6th through the 8th, 10th, 14th, 16th, 20th, 22nd, 24th, we saw gold sort of sputter around, but slowly going down, and we were able to draw a nice trend line connecting now pretty much 4 candles, even today's. What we saw in gold was an up move of 2.02%, but again, in the overall 2-day chart, we're still underwater. We see that the derivative oscillator is down. We do see that the MACD has not crossed over going down as it looked like it would on the 24th, but it's bounced back up. However, it's not bounced up enough to break through the 2-day trend line. But what's important for us to look at, and again, we don't have a change yet, but we still haven't had a crossing on the MACD going down on gold. It has not done that yet. It's continued to just sort of sputter around almost, well, I believe today it was barely below, well, yes, it was barely below the range of the candle on the 6th, all the way back on the 6th of April. So not a lot of down movement or up movement on gold. But let's now go back. This is going to tell us even more. We're going to go to the 4-hour chart. Look at what gold did. It hit a low, of course, as we look at this chart over the last several days. On Friday, the 24th, it actually went down underneath through the Bollinger Bands, and then it bounced up today strongly this morning, even stronger this afternoon, and you can see that wick on top of today's afternoon candle. Again, we're looking at the 4-hour chart. We have a crossover going up. Now, if we look back at gold, we can see, there are some things that happen with gold where we see a very short-term up move in gold back on April the 1st in the afternoon. That retraced itself by the 9th, and then gold started to really start moving down. Now we see it moving up. It is pushing through the 4-hour chart, and it's pushing through actually on the MACD, crossing over, going up. Derivative oscillators flipped over. And we also see that it has moved through, on the 4-hour chart, it has punched through the 2-day trend line. What's that telling us? Well, that's telling us to pay close attention to what gold is doing. Of course, the problem is we are getting out of the month of April, so we have to be very particular in what we watch. We can see where gold has tried to fool us a couple of times, crossing over, going up. This is a move up, and it is, of course, above the 0 line, which is more helpful in an up move. And we just have to sort of watch what's happening with gold. So that's where it is on the 4-hour chart. Is it going to go up more? Let's watch tomorrow, see if we, on the 2-day chart, see any penetration of the 2-day trend line, how that holds. But right now, gold is trying its best to move up. It is moving up. We got a divergence on the 2-day MACD, and we have a divergence going up, a crossover going up on the 4-hour. So watch gold. Maybe it's going to get its legs and start moving up again. Tomorrow should give us some good idea as to that. Well, again, thanks so much for joining us here on chartingwealth.com. We always appreciate you being with us. We hope that this is helpful. We would ask you to please let us hear your comments. If you would like the charting layout that we use here on freestockcharts.com, guess what? That charting layout is free. All you got to do is go to chartingwealth.com, sign up for our newsletter, and with that, guess what we're going to send you? You got it. We're going to send you our charting layout, which you can use for free. You can follow us along and put in any stock or ETF or index you would like to. Thanks so much for joining us. We always appreciate having you. Love to hear from you. Again, chartingwealth.com. Good trading.